All right, so we're going to continue here with Chapter 8, Setup 5 on SPACs, Special Acquisition Companies. All right, so a Special Acquisition Company, or a SPAC, and I'll move my video, I guess, up here, is typically a shell company that is purchased with the sole intention of buying another company and merging it into that company. So this is, and I think we already talked about this just in general. This is an easier way for a company to go public sometimes than the traditional IPO route. Now, there's a plus and a minus for it from the company's standpoint of whether it makes more sense and whether they'll get more money doing a more traditional SPAC, a more traditional IPO, or a special acquisition. But in any case, if you saw let's see, if you saw a private company that is profitable and suddenly going public through this SPAC, you may decide you want to buy the SPAC so you can become a shareholder of that company once the acquisition is complete. So one of them was, what was it? It was that space company, Galaxy, no, SpaceX? No, that's, no, what was it? Oh, I can't remember. But in any case, there was but this happens from time to time. And Virgin, maybe it was, yeah, Richard, whatever his name is. But so essentially, you have a company that, and Elon Musk could do this if he wanted to. If we all of a sudden got news that, CCIV, which is this is a SPAC, it's a special acquisition company. QS, this is is this a SPAC? SPCE, right? So Virgin Galactic Holdings. So this was a special acquisition company. So it originally started trading under a different symbol. I believe it was a different symbol, and it was back here. So you see there was this kind of like period of, this was like the shell company. There was kind of nothing here, and then the news came out that this was going to happen, right? And all of a sudden there was a lot of interest in the stock, and it started to become really volatile as people understood that this company was going to become Virgin Galactic Holdings, right? So these type of trades can be speculative and volatile. That's great for day traders, but it is risky if you're thinking about buying it and holding it, because there's always potential that the deal could fall through, and then you're holding a shell company, which is in itself worthless until this merger is official. So I'm actually a little more hesitant on these versus recent IPO breakouts and recent reverse splits. We have had times where SPACs are strong, and when we're in one of those periods of time where they are going strong and they just keep working, then I'll trade them and I'll try to be aggressive. But I do find that they're not always as clean, and it's probably for a variety of reasons. But I do find that they can be quite choppy. Hang on one second. Okay, so I was just reminded of the fact that I actually traded a SPAC today. So RSVA, this at the end you see ACQ Acquisition Corp. So that sometimes just in the symbol or in the name you can see that this is that type of company. So this one here today, this is a stock with basically very little price action. So it sort of has that recent IPO look. Break over 20, that's all-time highs, blue sky, and it squeezed from 20 up to $28 without too much resistance. It just kind of went right up. So battery maker ENOVIX, whatever this company is, to IPO in $1.1 billion SPAC deal. Excuse me. So to become public through a merger with this special acquisition company. So that's how that battery maker is going public. So that was $18,000 on that particular trade. So here's one SPAC, and again you can see here kind of a long history, basically no price action that starts to pop up. Sometimes when they start to pop up, we don't actually have a headline like what we had here on RSVA. It just seems like it's starting to open up, and you're like, someone must know something, but what's going on with this? And we don't really know. And then other times it's very clear that this is the catalyst that we've got. Hey, girl. So she's a little snowflake. She's got snow all over. It's snowing outside. So there you got that nice move from 12 up to 22, drops back down and moves higher. This is on a daily chart, so not intraday, but still impressive. Here's DKNG, another SPAC. Again, a period of basically no price action, then it starts to open up. There's another one right here, NKLA. This was a SPAC. I don't recall this being a SPAC, but I guess it was. Again, it's an easier way for these companies to go public, and so it's definitely not uncommon. But the cost of it, usually, just for reference, so I think we might have talked about this, but Bill Ackman had done an interview where he was talking about wanting to help Uber go public through a SPAC, and he was saying, I think on his from his side, that they'd be able to give Uber a guaranteed amount of money. We'd be able to say, listen, we're giving you this much money at the very beginning of the process. It's sort of a guaranteed, we'll give you this much, that we have this many investors, this is what we're going to do. Whereas with an IPO, they do the whole process, and then, eventually they give you, they tell you this is what we're going to IPO for, and sometimes that's a lot lower than what you'd like. And certainly, from the company's standpoint and for their potential shareholders, it's their obligation to try to get the very most during that IPO. So with the IPO of Airbnb, IPOing at $70 and then opening on the first day of trading at $150, the company got $70 a share. That's what they got for the IPO. So they left billions on the table. They got half of what the market was actually willing to pay, which was $150 on the day that it actually became publicly traded. So, for that reason, it can be, the whole IPO process can be tricky. So special acquisitions, there's reasons to go for it and reasons to not go for it. This was another one. Was this the one that was Galactic Holdings? Maybe this was going to be I don't remember, but anyways, from 7 up there to 20. This is another one. This was very volatile here, from 8 all the way to 72 and then back down to 20. So, sometimes these, we're in a crazy market where we had a stock last week that the news was that it was getting bought out at $4 and it rips to $8 a share. And you're like, wait a second, they're getting bought out at $4. What's happening? But sometimes the market can be irrational, and we're certainly seeing that there's a lot of volatility right now, and so traders are sometimes bidding these up. And hey, it's up 50%, it's going higher. I'm just going to start buying it and riding the momentum, and that can be very disconnected from the true value of the company and whatever company, in this case, they may be acquiring. That's not different from what happened on GameStop. Was GameStop really worth $500 a share? Well, it was, from just a very literal standpoint, worth that, because that was the price the shares were trading at. But its book value certainly much, much lower. And so there was a moment there where there was an imbalance between the share price and the actual value of the company. Now, those imbalances are what we, I suppose, profit from as traders. But you could think about a stock of any type. Warren Buffett looking for a value investment. He's looking for a stock that also has that imbalance where the price is lower than the actual true value of the company. Others are looking at things like Tesla and saying that, the potential earnings of this company are what make it worth this much more. Its potential to dominate the space of electric vehicles, to license out their software, or this and that. This is all what makes it worth a multiple of, XYZ, whereas a traditional utility might be only worth, a very, very low multiple. So, all of that kind of comes together, but those imbalances for us create opportunities. So however you look at it. So sometimes you'd look at this and think, golly, this doesn't really seem to add up, and neither did GameStop, but it doesn't change the fact that this was volatility and that's an opportunity. So here's another one, an acquisition corp, as you can see right there in the name. No real price action, but then all of a sudden starts to open up here on this day. This is one that we wouldn't have traded at this time. The volume is just non-existent, but potentially on a day where there is some news or something else, we could get something. INSU. So on this one, from 10 up to 1050, 11, 12, all the way up to 15. Again, very light volume, probably not something we would have traded a whole lot of on this particular day, but if we noticed it on the Gap scanner and realized it was a special acquisition company, maybe, we would have done a little research on that and kind of thought, okay, well, this might have a little more potential because it's blue sky, it's all-time highs. And that's what most SPACs will have going for them. So again, here, sideways, blue sky, all-time highs, no resistance. These are stocks that may, however, unlike a recent IPO breakout or maybe a kind of small cap or lower float stock, these may have much more interest among institutional traders, perhaps long and perhaps short as well, because of whatever it's being merged into. So I think for that reason, the SPACs sometimes feel like they're choppier and not as easy because they bring in that part of the market that sometimes can create some erratic moves. If you're working at a fund and you've gotten the order to, buy this or short this or whatever the case is, you may not be looking at the same technical levels that we're looking at. So one of the things that I've said before is that technical analysis works because so many people use it. It's the same reason that traffic lights work. They only work because people use them. If people stop using them, then they obviously don't work. So when you have, some, fire trucks don't really use stoplights. They just blow through them. And so if you get T-boned by a fire truck, it's kind of like, well, what the heck? Well, it's a fire truck. They don't have to use the stoplights. They've got somewhere to go. And so, you have traders out there that don't respect the technical indicators that we use. They just press the market order button for 100,000 shares and we're like, what's happening? Why is the stock breaking through resistance here? This is an obvious reversal setup, and why is it breaking? Or it's an obvious long. Why is it, flushing? What is happening? And I think that some of that is from institutional traders, high frequency trading algorithms, and some of it's from beginner traders who, are buying and selling without even maybe looking closely at charts. And we may see more of that given all of the interest in retail, among retail traders to be in the market. So here, special acquisition company, SPAC, BRPA. Again, you can see a big move from 11 up to $75 a share. These are big moves with halts going up, halts going down, back up. So, so we can see that this was special acquisition right there in the company name. Here's another one, another acquisition corp, STIC. So this was only like on the second day of trading. Sometimes, now usually when stocks change symbols, if they just change symbols, I've always seen all of the historical price action change with it. So they don't get to kind of lose all their historical price action. But then there have been instances where it does appear that a company kind of starts over with new price action. And I don't know if that's like maybe not just a name change, but an actual merger and some type of bigger change. But this is one that is starting with 3 candles. All right, and so with that, we'll get into Chapter 8, Stock Type, Daily Setup, number 6.